Good morning, traders. Welcome to today's market review. Today is October 30th, 2014, and today is Thursday. So, on the back of a very big night last night with the FOMC, Fed Chairman Yellen speaking, they stated that they're going to stop buying bonds and easing the markets with cash. That's usually done in anticipation that the markets are, finally stabilizing. The economy is back and producing at levels where they're very happy with. So it's a positive sign, okay? And as a result, the dollar actually rallied yesterday quite nicely against most of the pairs internationally, against the euro, against the GBP, and so on and so forth. So looking at today, Yellen will be speaking at about what's that? 3 o'clock South African time, but before then we have our weekly unemployment numbers that we have coming out, and we also have some other numbers coming out earlier today. At about 2:30 we have some numbers coming out of the U.S. It's a GDP number, and then there's a German unemployment number today. So all in all, it should be a rocky kind of day, especially after yesterday. Looking at the Euro USD, look at this nosedive coming right down from 127 to 125.95, 126. That's about 100 pip retracement in a matter of minutes. So, altogether, it was a rocky day yesterday. Like I said, you could play these, different levels, and we're at 125.97. We have about another 100 pips to our lows for the past, that we hit in the mid-October, early October month. But essentially, I would say that there wouldn't be such a bad time to pick this up at these levels, because it's trading in a range at this level. Okay, it's not trending right now, unless it's going to break 125. It looks like it's going to be trading in a range. So you could play the range. You could trade the range. There's nothing wrong with it. You can make 20 to 40 pips on it. It's a nice small move, but just keep your anticipation realistic. Okay, keep your expectations realistic. So that's what I would say with the Euro USD right here. Looking at some of the other currencies, how they fared, the GBP also sold off nicely from 161. And again, there's limited downside risk. If we look at a daily chart, we're at the bottom of the line. We retrace quite nicely all the way back. So you have steady support at these levels. So I would say that we're going to continue trading in this range for a little bit longer until we could see, that we can take it up on the upside. Looking at the USD Swiss franc, the inverse relationship, you see that it's really tore above this level, and it's going to challenge maybe this upper level, 0.96, 86, 87-ish. So this is positive news for the U.S., but it's having its effect on some of the other markets. Looking at gold, gold finally broke down yesterday. If we look at a 4-hour chart, broke actually sold off, because it means that the markets are doing well. So if the markets are doing well, gold is going to sell off, because gold is usually a more conservative approach to investing, and it's a more averse to market conditions. So what that means basically is that if the markets are strong, then gold will be weak. If the markets are weak, then gold will be strong. And as a result, you see the anticipation, the gold here has been very, very weak because the markets have been weak. Now, looking at the Dow here, you'll see that there's a little bit of a sell-off. There was a little bit of a sell-off yesterday, about 100 points initially when the news came out, and then we retraced right back. That's very, very common. Okay, this happens all the time. Where you see this, you can see it actually right here. If we just pull it up, let me highlight it right here. Okay, if we look at this bar right there, see that there's a long line, and the candle portion of the bar actually ended up above. Okay, so that means it's a very volatile day. It traded from here to here, but it's still closed above. Even though it sold off a little bit, it's still sold above. So in essence, this is a positive sign in my personal opinion, to have the sell-off initially and then for it to retrace. So I would be looking for continued strength, okay, in the markets, especially in the equities market, and let's see if this really challenges again the 17,300 again, to taking it out and making new highs for the year. I anticipate that there will be new highs for the year. That's my personal opinion about the markets. But altogether, you see that the markets have been gaining strength and really bouncing back from the October sell-off, which we anticipated and we talked about. Okay, but looking into today's trading, altogether it might be a choppy day, especially after a big day from yesterday. Keep an eye on the anything USD to see if it continues in the direction that it made retracements of yesterday, for either continued strength or continued weakness, depending on the currency pairs. This is Fred Razak at CMTrading. I want to wish you guys a great trading day. Thank you.